Hello, my dear students. We'll be discussing past adjustments, the last segment of the fundamentals chapter on partnership, and try and deal with certain illustrations and further things through the exercise problems. Okay. Now, and the last segment is known as past adjustments. As the name says, past adjustments means in the past, if there has been any error of omission or commission in the partnership firm accounts, then in that case we passed adjustment entry or adjustment entries for that, right? Now, as you would have noted that I said either we pass adjustment entry or adjustment entries for that. This segment is also divided into two parts. So to carry forward or to carry out these past adjustments and sort out the books of accounts of a partnership firm properly, we can have two different approaches. One approach where adjustment entry or a single journal entry is passed, and the second approach is where more than one journal entry, many journal entries are passed, means that the adjustment entries are passed in between. Now, there are obviously various steps that we need to follow. I want you to come to page number 1.89. Illustration 64. It's a small sum. See, as the heading of the sum says, omission of interest on capital. If you read through the sum, there are three partners. Capitals 3 lakh, 5 lakhs and 8 lakhs. Interest on capital was supposed to be charged at 5% per annum, which for in the deed has not been credited to the partner's capital account. So, however you worked out the accounts, the interest on capital was not paid. Now, there are two parts how you'll be solving the sum. You will be working out a tabular working note detail calculation, and based on that we will be passing on a final journal entry. Because we have taken up the first segment, so it will deal with passing one journal entry, right? So it's only one journal entry, that's the main solution. We will be leaving space appropriately for that, and we will straight away go into the calculation part. So first and foremost, you've ignored placing the interest on capital. So on 3 lakhs, 5 lakhs and 8 lakhs respectively, you'll calculate the amount of interest for all the four partners, right? So here it comes to 15,000, 25,000, 40,000 and 50,000, right? As calculated, pretty straight and simple, 5% on each capital figures given. Now, without posting these, see, the firm has been said that it had got a certain amount of profit already. Now, after we place in the interest on capital, obviously the profits will change. So please come down to that tabular representation. In the first line itself, you can see interest on capital. Now, interest on capital partners are supposed to receive, so the capital accounts needs to be credited. So A, B, C and D, their interest has been credited. If the partners get credit in their capital accounts, firm will debit, because for firm it is the expenditure, 1,30,000 being the total. Now, if the firm is incurring an expenditure, that will result into ultimate loss. So in the next line, as you can see, sharing of loss has been given 1,30,000. So firm's account should be credited, so 1,30,000, and because partners are being burdened with that loss, their capital accounts should be debited. Now, the deed is silent about share of loss, so obviously equal portions of loss will be shared. So 1,30,000 divided by 4, 32,500 individually, and balance so to be adjusted is, you will be finding out the difference in debit and credit totals of all four partners, and there you will see two of the partners have got debit balances and two have got credit balances. It could be the other way around also. 3 partners debit, 1 partner credit, or 3 partners credit and 1 partner debit, and so on, any permutation combination. But if you've done your postings correct, the sum has an automatic cross-checking involved. If your debit and the credit totals match, then you know that your sum is correct. So basically, what are the steps? You need to you need to carry forward the past adjustments. All the expenses which the firm has missed should be debited from its accounts. All the incomes that the firm has missed, that should be debited to the firm's account, and vice versa, the debit and credit should be given to partners' capital accounts. If partners are receiving, the capitals will be credited. If partners are giving, the capitals will be debited. And finally, with the difference in debit and credit, we find out the balances. And now if you can go back to the main solution, you will see A is capital account debit, B is capital account debit, 2C and 2D. Where are we getting the values from? That last line in the solution, in the working note that you worked out, your journal entry is simply based on that. Alright, if you want to theoretically cross verify, just before this illustration 8 steps have been written. So I'm not reading out those steps. We will be taking up that in our online class when we do the portion in detail, but you can cross check that, get a tally done, and the same things have been written there theoretically what we have just gone through. After this, you come to page number 1.92, and there you can see illustration 68, where there are 3 partners with capital 4 lakh, 3 lakh 20 and 2 lakh 40. Interest on capital, salary and transfer out of general reserve, those were missed. So if you now see the working note, same things like we did in the previous illustration, again same have been done. If these were missed, then profit distribution has been wrong. So the first step is, first give the reverse effect of the profit. So firm profit should be adjusted at 2 lakhs because general reserve is supposed to be considered. So firm's new profit is 2 lakhs, which is supposed to be adjusted as 1 lakh 20, 40 and 40 for the firm. So we brought forward the net profit. Then salary and interest on capital has been given. I have told you when the partner's capital account will be credited, when they are receiving. So here for salary and interest on capital, that will follow. After you adjust that, you will find that ultimately the divisible profit with the firm is 72,000, which is supposed to be divided in the ratio of 3:1:1. Likewise has been done, and you will see that the net effect is coming as to 20,800 debit for the first partner, 9,600 debit for the second partner, 10,400 credit for the fourth partner. And there's general reserve of 20,000. We need to adjust that. Based on this workout of debit and credit, you will simply see and write the journal entry. So the above journal entry for the solution is first partner debit, second partner's debit, to third partner to general reserve. And here we've used current account because the sum has partner's current account, right? Not to worry, you can always fall back to this audio lecture of mine and work out the problems, and more so we'll be taking up further more detail of the portion in our online class to wrap up this segment. After this, you come to page number 1.98, number 77. There also, in paragraph wise, same sort of a sum has been given where salary is supposed to be adjusted, interest on capital is supposed to be paid. 3 partners have got capital 30,000, 20,000 and 10,000. Net profit before charging any of these adjustments has been 30,000, and final profit sharing ratio should be 5:2:3. The previous sum, what we've discussed, this one is just an extension of the previous one, including commission of 5% of 20,000 to be given to the third partner. Likewise, as I said, I'm repeating once again, any income to the partner should be credited to its capital account or current account for the partner and debited from the firm. Here also, if you see interest on capital, salary, commission, all those have been debited for the firm and credited in all 3 partners' account. Finally, when you have net distributable profit of 19,650, even that needs to be credited, and finally the balances would be sorted out as debits or credits. And if you've calculated correctly, you will see in the journal entry automatically the corresponding debit and credits, they match, right? The first line again I would like to highlight, see, first and foremost, that wrong profit has been reversed. That's the reason why that 30,000 of wrong figure has been credited in firm and debited in the partners, right? Next we come to the last portion, okay, last of this segment, where adjustment entries are passed, right? Adjustment entries mean we have the provision of passing more than one entry. Here I would like to take the illustration number 81, that is page number 1.102. Here there are 2 partners, 30,000 and 40,000. Interest on capital, interest on drawings are there. Individual drawings figure have been already given, a half yearly basis and quarterly basis. Now through the entire chapter we have already done So many calculations on interest on drawings, isn't it? And net profit of 20,000, obviously that's a wrong one, we already know, because that is before any adjustment, and the final ratio is 3:2. So here also, in the similar manner, in the working note you will find the capital has been found out for the partners. I think we've already discussed how to do back calculation and find out opening capital. Then for individual partners, you can see partners capital account adjusted. So you've brought down the balances for the partners, you've passed for interest on capital, you've passed the entry for interest on drawings like you would have done for the capital account, and found out the final share of profit. Now, the rule in these chapters is, as I've always told, I've shared that with online classes also, there are certain sums where you will be doing the ledger, from that you will be drafting the journal. This is one such sum. So after you prepare partners capital account adjusted, just see and carry down the journals further from there itself. The last one, Amit and Manzar, the partner's name, 3:2 ratio, 3 lakhs and 2 lakhs their capital, and further they've given 3 adjustment. Go through this sum. In similar manner, PL adjustment account and partners capital account, current account, they have been drafted. No adjustment in partners capital account because it is fixed in nature. So salary, commission, interest on capital, all those have been discussed and adjusted in the partners current account. Again, in the working note, you will be doing back calculation and adjusting interest on capital and interest on current account balances, so that you can find out the opening balances for the capital account, and based on your PL adjustment and partners current account, your solution of journal will be drafted, right? So for the first portion, it is comparatively easier to carry forward past adjustments, and the second one, the last two illustrations that we've just discussed, I will be discussing it further in detail and take up all your queries in the online class, so that we can wind up the chapter successfully, right? And then I'll let you know how many sums and which ones to do from the exercises, right? Please go through the portions discussed. I've mentioned the illustration numbers. Please go through it so that we can well sort it out in our class. Thank you, everyone.